Guys, what's up? It's Gledgio. So had an idea for a video. It's not campaign or politics related. It has to do with a big public policy issue, healthcare. And I wanted to break down just why the system that we have in this country is so completely screwed up. And I have a perspective on it, having now been in the perspective of someone who has a health insurance policy, as an individual, as an employer who pays for coverage for staff, and then also as a provider that gets paid by the insurance companies. I'm going to show just why this system is so completely screwed up, and I think it might interest you. So, for some background, I know I have some folks who watch this from outside of the United States. We have kind of a public-private system in the United States. We have a couple of big government payers, Medicare, which pays for health insurance for seniors, Medicaid for low-income folks, and then we have a bunch of commercial payers, like big, giant insurance companies. Some are nonprofit, some are for-profit. Okay, so that's kind of the mix. And the weird thing that we have in the United States is that we have this quirk where it's an expectation that employers are supposed to pay for coverage, for health insurance coverage for their employees. And it's like one of these things like, why do we do this? I don't know. It's because of a law that somebody passed in like the 1930s that established a tax break when employers pay for the health insurance coverage, right? So if an employer pays for health insurance for an employee, they don't pay taxes on it. But if the employee just tries and buys the insurance on their own, they would pay tax on it. It's ridiculous. And what it ended up doing is it created this expectation that as a benefit, an employer is supposed to pay for your health insurance. Now, this did a couple of really, really weird things. First off, it makes employment in the United States like really, really expensive, especially for small businesses that don't have a lot of margin, right? So if you're like a small restaurant, you don't have an extra $300 to $1,500 a month to pay for a health insurance policy for your employees. So this expectation, I think it hurts hiring, but that's not even why I'm writing this. What it really does is it creates all kinds of bizarro distortions that really, really create all kinds of efficiencies that are driving up the cost of healthcare. So I have a unique perspective on this because I've seen this from three different perspectives. I've seen it as someone who has commercial coverage. I've been employed and I've had coverage that my employer has provided. I also now own a business where I provide coverage to my employees. And then I'm also a health provider, mental health. So I get paid by the insurance companies for providing services to those members. And what's really interesting about this system is just how completely different you get treated depending on which one of those buckets that you're in. So from the employer perspective, my company pays for mental health. We pay one of the big companies. I don't want to say which one it is because I don't want to get in trouble. But the customer experience that I get as an employer is great. I call them up, they answer on the first ring, they're cheerful, they answer all my questions. They're great, mainly because I'm their customer, I'm paying them. And from my perspective, they're doing a really, really good job. From my employer perspective, they actually do a very, very good job of solving this problem that I have, which is that I have the expectation that I have to provide health insurance for the staff, and they help me do that. And it's pretty easy. I got to fill out a couple forms per year, but the customer service is pretty good. And from the employer perspective, I'm very, very happy. Okay. Then there's the perspective of the person who's consuming the healthcare, the employee or the employee's family. From that perspective, it's okay. It's not usually great, but it's usually pretty good. You find a doctor that takes the insurance plan, and you submit the claim. You probably have to pay a copay, which is like a little part, little share of it, because they don't want people overusing the services. But you pay a copay, and you get the service. Sometimes they screw up. Sometimes you go to a doctor that you think takes the insurance, but they don't, and you'll get a bill. Or sometimes the doctor will do a procedure that insurance doesn't cover, and you might get billed or whatever. And those are headaches, major headaches. But for the most part, it's okay. It's pretty easy to be a health insurance client. Then there's the perspective of the provider, the person who gets paid by the insurance company. And from that perspective, it's a Kafkaesque disaster. All right. Because what's happened is the insurance companies, they're not really insurance companies. They're health management companies. And what I mean by that is, in the United States, a single health insurance plan for one person costs $400, $600, $700 a month, something like that, depending on where you are, how old you are, what your health is. If you have a family, it could cost $1,200 to $3,000, depending on, again, on where you live, how old your kids are, that kind of thing. So huge disparities. But if you're paying $1,000 a month to a health insurance company, do you really like, is the best use of the insurance company to like bill the insurance company for an $80 doctor visit? Like, does that really make sense? Or should you just have a cash transaction where you pay the person and leave the insurance company out of it? Because I can tell you that what these companies do is they say that they're lowering costs in the system by managing what gets covered and what doesn't get covered. It may be the case that they're saving money in the system, but in so doing, they're creating a whole new set of costs, which is the whole insurance billing, schematic that goes on. I can tell you that in this country right now, about 10% of insurance costs are billing. It's valueless. It creates no value in healthcare at all. It doesn't create a doctor's visit, right? It's about 10%. So for every 9 visits to the doctor, one visit, the cost of one visit is just to bill those other 9 visits. It's completely insane, all right? And the way that the insurance companies do this is by fly-specking every single claim for some kind of error so that they don't have to pay. So I'll give an example of this. I had a therapist who had a client with a challenging intake. So, usually you see the client for the first time and you have to take down, their vitals, what's going on. And it was difficult. The client had challenges and the therapist dutifully went through, and doing the intake took more than 1 hour, took more than one appointment. Now, some insurance companies will allow you to do 2 intakes for complicated cases, but some don't, right? So she did 2 intakes, and then we find out a couple months later that they didn't pay for one of the intakes. Why? Well, we don't pay for 2 intakes. That was it. Like, oh, so could you pay us for like not an intake? No, they just rejected the claim, and then it gets lost. My bet is that there are literally millions of unpaid claims for services provided that are totally legitimate, but that just don't get coded correctly. And that's how these insurance companies save money. They're not actually saving money. They're just not paying for services. Another thing that they'll do that is infuriating is they'll have this process by which a healthcare provider gets approved by the insurance company to practice for that payer. We had this one payer, again, I don't want to say who it is. There was a problem in the form that pushed back our credentialing with this company by 3 months. We got that resolved, and then they found another error that pushed back the credentialing by another month. And then when we got that resolved, it was wait 90 days to get your credentialing. They didn't get it to us on the 53rd day or the 78th day. They got it to us on the 90th day. All right. So what the company is doing effectively is pushing back their contracts as long as they can so that they don't have to pay claims for the clients that are looking for care. All right. That's how the insurance companies save money. It's by denying and finding creative ways through bureaucracy and bureaucratic ineptitude to prevent care that should be happening from happening because we have a process that we need to follow. The further I get into this industry, the more I'm realizing that the health insurance companies, again, first off, they're not insurance companies, they're health management companies, but they provide no value to the system at all. All they do is they create this 10% dead weight loss to the system. Everything costs 10% more because of this billing nightmare that they've put in between the client and the provider and the company. And the solution that what should happen, getting a lot of thought to this, is what we should have are those big health savings accounts where like up to a family's first $7,000, $8,000, $9,000, $10,000 worth of services, you pay cash. You pay right out of tax-free money. So instead of getting a benefit, a tax-free benefit that pays the insurance company, you pay yourself with tax-free money. You pay for services out of your health savings account up to a very, very high degree. And then over and above what you can't pay, insurance kicks in, like insurance normally does. right? Like you have insurance on your car so that you can replace it when the car is wrecked. You don't necessarily need insurance for a small. Well, now today that's a bad example because today every freaking car accident is like $1,000. But you get what I'm saying. Like I don't think there's any reason for the insurance company to have to process a $100 claim. That's just silly. It creates extra cost in the system to do that. Just have people pay out of pocket. And then once they hit a threshold where you actually need insurance to kick in, at that point have the insurance companies cover the really, really big ticket items that go over and above whatever your coverage is. The challenge, again, I've given a lot of thought to this, is that democracy makes it very difficult to have reforms like this. Because what will happen is if a candidate decided that they wanted to go straight at this employer-based healthcare regime that we have because of all of its inefficiencies, the ones that I sound like Robert F. Kennedy right now. I don't know what happened to my voice, but if you decided that you wanted to go after this and try to reform it, what would happen is all of the advocacy people, the lobbyists for the healthcare insurance companies, they'd come out of the woodwork and they'd find creative ways to scare clients that it would be bad for them. It would be a challenge, but it's something that would benefit everybody if we could just basically have the government fund the savings account so that you never have to pay anything. There's always enough money in your savings account up until some threshold, $10,000, at which point the insurance kicks in. Figure out a way to subsidize the gap in between the catastrophic coverage and your health savings account. There are lots of different ways the government could do that. But if we did that, you'd see all kinds of ads trying to scare you that is going to hurt you and take away your coverage or take away something that you're used to. So that's the reality of health insurance. That's why it's so screwed up, is because the embedded interest groups have made it impossible to reform it. And it sucks because, like I said, every dollar that you spend on healthcare, 10 cents of it is feeding into the billing industry, which adds no value at all. It's just a complete and total deadweight cost to you, to the provider, and to the economy. So on that uplifting news, I'll let you go, but let me know what you think. Drop a comment. Let's talk about healthcare.